Hello, ladies and gentlemen, and welcome back to our special weekend edition of the markets around the world. Well, the number one question coming in is this market going to turn? And if it is, where is it going to do so? Well, we have some key levels moving forward, and as we've suspected or expected over the last couple of weeks, we've been in a bullish run. A lot of this has to do with human psychology, smart money versus dumb money. Everyone's been too bearish. But as you may notice when you read the articles going around the news, and also when you've been on Twitter or any other social media, people are starting to come around to the bull case scenario. We're at a critical level that has really been probably one of the most important for 2022 so far, and we've got a lot to unpack in today's video. So join us as we go through human psychology right now in the markets. See you soon, guys. Well, welcome back everybody to the daily show where we talk about stocks, commodities, and cryptos. Let's begin by discussing smart money versus dumb money. Now, unfortunately, many retail traders like you and I out there are considered the dumb money. We often make the wrong mistakes, and it's really understanding when you've got to flick that switch and get out of positions that becomes one of the mantras for being a good trader and possibly even a good investor. Notice here that dumb money has reached new peaks. We've basically reached and breached past the March-April peaks. We've also gone past where this all began back in January of 2022, and we've also gone above other pullback points that we've seen in time. You can see how the dumb money indicator is pretty strong here from the perspective of being able to pick good periods or areas where you might want to be scaling out or at least getting through the position. Smart money continues to decline their purchasing power here. They're still a bit more, let's say, bullish than they were, but they're getting back down to that level from March and April of 2022. So how else can we see this represented? Surveys is a good way of doing it. The last week's survey, 36.7% of retail traders were bearish. That's down from where it was, 31.2% neutral, pretty standard, and a few more bullish people, 32.2%. Now, the important thing to note about this is this survey closed on Tuesday of last week. So you can pretty much expect that more retail traders are now heavily bullish here, and this reading has probably skewed. It's a good time to start to get incredibly cautious on this market at these points. And we've got really some massive charts going on later on today's video that I think a lot of you will enjoy because they really present this. Let's talk about US put call option ratio. So we know that when lots of calls are opened on unison, usually the market goes down, and when lots of puts are opened on unison, e.g. here, of course, the market will go the opposite way. And we've used this pretty successfully. We talked about it back in June, and of course, it helped us to create that bull thesis on the Nasdaq, especially through that May into June period. And really now we're starting to go into the opposite way. We're saying, well, wait a second, there's a lot of calls being opened. Similar to back in March and April, are we about to flick the switch? Well, of course, we've got to bring the charts in later on today's video to really discuss that. Here's the small traders. This is the only problem with the thesis so far. Small traders are not as bullish as they were from an options perspective back in March, April. That's more of a no-brainer kind of attitude. Over here, while it's not quite as bullish, I would love to have seen this one continue through. Unfortunately, it looks like a few retail traders went bearish last week on options, which I can understand why, but obviously it's not good if you're looking at it from just a pure psychological standpoint of what Wall Street wants to do to make the most amount of money possible. How do we know this indicator works pretty well? Go back here to 2002, 2003 crash. You'll notice that often when the market goes to that kind of overbought calls, it goes sideways to down. And when the market goes hugely bearish, it often rallied through. Here are those significant rallies that we saw to sideways action. And of course, all of the flicks and switches that happen in between. It's a very good indicator for helping us out. What about money flow though? What are the biggest traders doing? Are they buying? Are they selling? Well, as of last week, Tuesday close again, they were kind of just net a little bit more bullish, but overall pretty flat. Now, we've seen these rallies in asset manager purchasing a few times this year in 2022, and each time it's run out and it's turned bad. We also noticed that the leverage traders, this is the more the hedge fund managers and stuff, are heavily short the S&P. Now, they've been getting smashed so far, and I am here to tell you that sometimes these guys do get it wrong. Remember, hedge fund traders actually underperform the market, but they've remained open in their bearish positions. They haven't added any more, but they have kind of closed a little bit of their buys. So realistically, when we're thinking about it, the money flow is pointing towards there's a chance, and a very good chance, there is a pullback only a few weeks away, if not this week coming, based on that data. What about for the Nasdaq? What's going on there? Well, actually, leverage traders increased their short bets over the last week, while of course we saw asset managers purchasing up. So are the leverage traders going to be correct? They certainly were back in April into, of course, that crash over that period. They've been fairly correct here on the Nasdaq for a couple of years now. When it comes to them adding these short leverages, it usually means that there's only a few weeks behind when markets crash. And a lot of people don't know why that happens. It's because they add to their bearish position and they do it over time. Remember, they don't have the traditional stop loss. They've got a lot of money behind. Yes, they can get squeezed. We all understand that. AMC, GME, all of these other stocks that have done well in those squeeze environments. But this is a very important point that, they do it over weeks and it takes a little while to manifest itself in price. What you're looking for then is hysteria, euphoria, FOMO, kind of some of the things that we're starting to see appear on this market. We mentioned this in the last week's video, S&P 500 weekly gains after really small movements, but still a lot of call buying opportunities. So the first week turned out to be pretty good, which it was. I mean, last week, of course, we saw the S&P 500 do well. The second week, the 1 month after, the 2 months after, and the 3 months after, this is where things got sketchy. So we've got a lot of people buying calls still from the retail side, at least short dated. You can see that later on today. We don't have them quite the same level that we did have in March and April, but this points towards potential weakness coming forward. What else though? Because we have a lot of investors following this channel as well. Should investors say, well, are we through the 50% fib now, Tom? Are we going? Have we seen the low? Well, I tell you what, corporate insiders are saying, yes, we have seen the low. They are purchasing, and these are pretty good signals for the longer term. I know a lot of you may not want to hear this, but the fact is that when corporate insiders start to purchase at a pretty heavy rate, like we've seen here, they're generally correct. In fact, the stats are blindingly good over the first year and 3 months. If you look at the next 3 months after they started to give these signals, we were up, and usually the market was up pretty big, especially 1 year later. So has inflation peaked? Of course, the market's pricing in Goldilocks situations. A lot of you are going to disagree with that. I'm just bringing you the raw data to do with what the insiders are saying, and the insiders tend not to be wrong. Remember, these are the guys on the ground floor in the businesses themselves. They could be wrong. They just generally don't have to be. So, of course, if we're looking for a pullback here, it could be for the next 1 to 3 months. And then we see that rotation back in. Of course, this could be the opportunity that some people that have missed out have been looking for. What else is going on here with midterms? Well, of course, we have so many negativity kind of stories that could come out. We've got, of course, COVID lockdowns in Shanghai or Beijing that could happen at any time. Believe me, they could. Then we've got midterm elections. This is a thing. Of course, volatility is set to spike middle of October, August into September, into October, the most volatile periods of the year. And we know as well that with the modeling that we have with the current data, we've brought this chart up before, there's really two scenarios here. There's the scenario where we're pretty much probably around here now in terms of where the market is. We either pull back, which in a lot of case scenarios is what happens. It pull backs and it comes back down to those lows again. Usually it doesn't make a new low. Or we go into this epic kind of rally that continues on. But usually we do get a drop before that. We haven't seen the drop yet. The drop has been negligible. So we should at least see a little bit of a drop before either of these scenarios plays out. Whether it's a drop then pick or a drop then drop, we don't know yet, but certainly we're at that key pivotal point. We know as well during midterm years that August, the back end into September are the weakest 2 months. Often the back of the year is very strong. That would be in line with that corporate insider purchasing. And there's nothing really we can do about the data and the stats. They are what they are. If you look at breadth stats or anything like that, they're all looking much, much better. Could this be a bull trap? Absolutely. Is it possible that the market will go to new lows? Of course, but the scenarios here really need to play out very quickly for that to do so. We're within basically 1 to 3% on the SPY for it to turn, and it needs to do it pretty soon. 62% beat rate that beats 2,109 versus misses 1,317. Still pretty weak there. Earnings for this week, still a few nice earnings coming out. If you're interested, you can pause it here. So just before we jump into the charts, I'd like to thank the sponsor of today's video, which is Tiger Brokers. And Tiger Brokers have many great features, but one of those in particular is, of course, the ability to trade both the pre-market and the post-market on US stocks. Now, this is something that's very unique to especially traders out there from Australia, because in Australia, we just don't have access to these pre and post-market markets like many other people around the world. Well, luckily for us, Tiger have bought the pre-market to us. So they've got pre-market hours before the market opens and the post-market, giving us a total of 16 hours in total. This is way more than any of the other providers do so. So if you're interested, check out some of the special offers from Tiger Brokers in the description down below. Of course, users outside of Australia, there's many different offers from you guys as well. So check it out. And if you're interested, have a look at the platform from the perspective of all of the other great features. One of the things we always talk about is the ability to create your own page with all of your favorite tools in access straight away. We have here, of course, the bid ask windows, the charts, the timers, the news, everything else that you might need. You can customize it yourself, and I do like customization. It gives us a better opportunity to understand these markets right now. So the volatility index is right and perfectly poised towards volatility increasing. We already know that August, September, and October, during midterm election years, hey, the stats don't lie there. They're usually volatile. No one's talking about that. It's about to heat up. We also have points what we've reached previously. 10th of Feb, 30th of March into April, low VIX again. So are we going to see these spikes? Well, it would make a lot of sense. And when you look at the charts that we'll be covering very soon in today's video, it will make a lot more sense to you about that. US 2-year, the bond market is not convinced. You know, if that inflation number was so great and everything was perfect and 0% inflation was here, shouldn't we be seeing the bond market, the US 2-year, coming down because it's convinced? Well, guess what? They're not, and they're not doing anything. If we get a new high here, expect that to be the catalyst that probably breaks the camel's back and pushes this market down. US 2-year, something to watch. Have it on your charts, guys. You've got to watch the 2-year and, of course, the 10-year. Both of these are going to be pretty important. Speaking of the 10-year, some people are feeling FOMO in the markets right now, saying, oh, I missed out on Apple. Damn it. I missed out on Amazon. I missed out on whatever else it is. Well, you know, yeah, maybe you missed out on Apple, but there's other stocks in the markets that are still, you know, relatively cheap. Now, here's one that a lot of people aren't discussing, and that's TLT. If we truly have, let's say, beaten inflation, truly, if we have, then we should see the 10-year and the 2-year go down. That is the yields. Now, what will perform well in those markets? Well, especially long duration treasury yields should perform well. And this is now at head and shoulders. You guys will know that I've been very much playing the case here of TLT. And I do think that it's getting clear and close to that time. Now, the reason I bring it up is because people think you can only make money out of, let's say, the stock market. Well, this bonds market here is down 33.28%. Comparatively, these are cheaper than, of course, the stock market itself. So what's probably the safer bet right now? Even if we got back to where we were in November 21, we'd be up 34%. If we got back to where we were in March 22, which arguably we are back in the market, it's 15%. Now, it's not a solicitation to do anything, guys. I'm just pointing out that if we have beaten inflation, shouldn't we see TLT being a little bit better? Well, of course, if we believe yields are coming down, especially the US 10Y, then this is going to be the play. And a lot of people say that considering bonds are inverted, that is, the short date is basically above the long date, that there is a sickness in this economy that could require cuts of interest rates back in 2023 into 2024. So again, that's going to be good for TLT. It's an interesting one, certainly worthwhile checking out. Let's move over to breadth thrusts and talking about those. S&P 500 stocks above the 200-day moving average. Now, this is always a very big indicator that people use to prove whether we're out of, like, you know, the doldrums or not. Now, we know that we went into beautiful territory. We've discussed this before. We also know that when you come out of this territory, it's very important to continue that thrust. Of course, that means that the market is truly bullish. We are approaching what I would call a pretty important point. And this point seems to rely around this kind of 50, let's call it 55.84. We're currently at 44.32. There's been other thrusts in the past that have failed. Here are thrusts that have failed. So if these have failed, when do they fail so? Very, very, very soon. Like if it's going to happen and going to fail, most of the time they've done so around these points. So maybe a chart to chuck on and have a look at this week. What about US dollar? Is it showing us anything? Well, US dollar really made two equal lows here on the daily, and it rejected off both of them. You'll notice this is the long leg doji high, low, open, close that we've got going on here. We've come back to the daily trend line that we broke through last week, but things actually are starting to look okay for the DXY. Let's go down to the 1 hour and understand the small market changes down here. So first ups first is for this to go truly bullish, 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 you're going to want it to break past 107, okay? 107, next stop 108.64. This could be an amazing trade moving forward, certainly one to watch. If the market goes bearish, expect the US dollar to fly. There is a case scenario where it could do this. Remember, a lot of people are going to be talking about cash is, dollar index is going to get thrashed and everything like that at this point. What about the price action that we saw though? So we had basically like an equal low. We broke past that, showing some bullishness. And realistically, we had a nice little kind of rally here that came through. So if the US dollar is going to find strength, it's going to do it so here. It will need to break through 106.50 as well, probably pull back a little bit past that point. And then if we get past 107 this week, well, it's on for the DXY. That's going to be a big deal. And of course, if that happens and the market hasn't fallen yet, that means the stock market, watch this US dollar. If it keeps rising, and the stocks keep rising as well, massive warning here to the stock market players. So yeah, US dollar, although a lot of people will be weak on it because it's hit back to that trend line, this is decision time for it. Mark out your lows, 104.60, mark out 106.50 and 107. These are all going to be critical points for this week ahead for the dollar. Of course, we get a new low, well, the US dollar is going to get melted. I'm pretty sure about that one. Let's move over here to the gold trade. Of course, if we bring up gold, you guys will know that we've been pretty bullish on it here. Money flow continues to be very strong for gold. It's at the point of criticalness. It's basically at the POC. So sometimes, we like to use things like volume profile. So if we bring up volume profile here together and we add in fixed range, and we'll just quickly add it to the charts. So we'll do this. There we go. What you'll notice is that we have that POC sitting around here. So right where it closed up, decision time critical for gold. If gold fails here, then it will go, of course, down a little bit further, maybe 1754, possibly even our really cool scenario, which will be 1715. And you'll notice that it's bouncing off this level right now. It's coming down, so it came down, up, down, and then it just cannot get through 1783. 1783, key support. A break below that should expose down here at 1755. A break above 10.8, you'd say 1086, or sorry, 1806 or 1813. These levels could be massive for further big bullish action by gold. Be very careful here, guys. Everyone's probably talking about gold now. We were talking about it down here. We've been very bullish. This is the danger zone. It's absolutely in the danger zone. You can see it on the volume profile and everything else. Watch the DXY. If the US dollar is going up, you couldn't bet on gold just yet, okay? It's not really the right thing. It's in the right month though. August, September tend to be very, very good for gold trades and gold stocks, etc. US oil, what's going on there? Rejected. Basically, I don't have too many opinions on oil, as I've said before, other than I've got a bearish stance on it over a longer term. If inflation truly hasn't gone, we need to see oil pump. Again, oil will need to get through this equal high here, which sits on the price. Let me get that for you. 94.90. So basically 95. If we break through 95 this week, expect oil to pump. And if we just continue in this current trajectory, weakness could be there. An interesting kind of flip zone on the Monday trade. This is resistance becomes support on the smaller time frames. It's got to find buyers here and again get through the 95 to push that $100 a barrel kind of objective that many people have out there. Move over to Tesla. It's coiling. It's stuck within a zone. A lot of red days. All of a sudden, we got a green one on the Friday session. If you go into the chart here, not really anything too particularly strong about it. It's kind of got that first step of potential bullishness. Market overall has liked the price of 856 and found buyers there twice now. Kind of looks like to some people maybe an inverse head and shoulders, left shoulder, head, right shoulder. And if this market continues to go bullish, remember the case scenario here for Tesla is to move to this level, this trend line, 1062. It's an interesting zone. If the market keeps going bullish, you break through the price of, let's say, 950. The next stop, probably going to be 1060, 1050. So yeah, there's a bull case there to be made. Bear case just underneath this price here, 840, down it goes. Next stop, 774. And I would say the market at that stage is failing as well. Apple, the stock that cannot be stopped. This thing it's a beast, I gotta say. Yeah, July is one of the best months of the year, but to be out here at 27%. 27%, guys. That's unusual. It's left gaps behind. I'm smelling bad stuff coming. I mean, you got gaps everywhere on stocks. You have the stock that is pretty much the predominant FOMO stock for retail traders outside of, the AMC, the Tesla, all of those types of things, really finding itself. And people are just buying relentlessly. I mean, it just cleared on the weekly above this. Is this a swing failure or are we leading to 180 again? I mean, we've hit this before. It's actually way, way in front of the rest of the market. Apple's performance here, although it is a massive winner, is almost negligibly down for 2022. In fact, I don't even know if it is down for 2022 anymore. Where do we open here? December. Yeah, I guess it would be just down. So this stock is absolutely flying. It's leaving gaps behind. You can't really say anything negative about it in terms of the current bullish sentiment on this market. It just keeps going bullish, 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 bullish. You're probably wanting to put some trend lines on the back of it now, just to figure out, different trend lines here to figure out where it could be weakening. But there's no signs of Apple's weakness yet, except for every single indicator you put on it that's going to show divergence. I'm telling you, this one here, it smells kind of like it did back in March when we had those epic bullish days. I think it was like 9 bullish days or 8 bullish days in a row. That was certainly statistically weird. XLY versus XLP continues to point towards this being a pretty real recovery. There's still chances, of course, of pullbacks, and I personally believe there will be a pullback very soon, I would say in the next couple of weeks here, because it makes sense. But yeah, overall, the recovery here is pretty significant. XLY, XLP, this is consumer discretionary versus staples. We're seeing that rotation. And if you load up like an XLP versus SPY, you're going to notice something very strange has just happened. We've basically gone a double top pattern and broken through. Last week was incredibly significant. We made massive changes here on the markets, and you can see that on XLY versus the SPY, XLP versus the SPY. Defensive stocks are getting rotated out of, and people are going into the general broad market. This is a fairly big one. It often ends, of course, these epic kind of crashes and things like that. So if you think about all these epic crashes in the past, 2016, look at this. Once it got through that point, yeah, it had pullbacks in it still, but it was the beginning. Let's move over here to the DAX. DAX coming up to our trend line. This is going to coincide amazingly well with the US stock market. We are so close to 14,000. Can you smell it? I can. It's it's really close. So this is going to be a big one if it happens, and you'll see what I mean. Trend's still up. Obviously, I'm not too concerned or feeling too much FOMO either way. If you've been following the channel for a while, we've been really looking at the bullish side now for a little while on these stocks. Of course, yes, we get a little bit descaled here, but you've got to just come from this market of, if you feel really bad because you feel like you're missing out and you feel like you've got to get in, often that's the worst time to do so. Just always ask yourself the question, if you jumped in when everybody else was telling you about it, what happened a month later? I'm pretty sure it wouldn't have been that good. Let me know in the comments down below if you've ever done that and whether a month later it would have been good or bad for you. And I'm talking about the real euphoria, when everyone's jumping around going crazy. Russell 2000, possibly moving towards the 205. We're seeing Russell really outperformed now. It's doing pretty well. Here's a good chart to follow. We've seen this happen a few times before. The Russell 2000, basically, we'll get rid of this volume profile. Russell 2000 is outperforming the SPY at the moment. That means small caps are doing better. Now, this is usually a symptom of the beginning of a new bull market. Of course, you see here, when it's underperforming, it's forming base. Will it break through? Remember, really, we came out of that kind of super bear kind of concepts, and most people flipped the switch around November of 2020. Even the haters were flipping at that point. Where are we? Well, we're kind of at this zone. 8th of June, 17th of August. Notice those times. 3rd of January. Notice that time. March in here, we flipped. And then, of course, August. So will we kind of go more bullish? This could point towards the Russell being actually the play here over the next couple of months. If you have felt like you've missed out on the market, the Russell may outperform the broad market here with recovery. What about Nasdaq? Well, Nasdaq really broke through our weekly trend line. Hard to ignore that. It's done pretty well. It's also come up to this super critical zone. I mean, it's crazily critical. Check this out. So this was the highs here formed in April and May of 2022. So this was April and May. We are right on that level, just swinging higher. For the market to fail, taking a little bit of a bull move here and then going down would be the ultimate trap. This is what they call a swing failure pattern. And this would be a pretty cool or big area for it to happen in. Obviously, we have gaps everywhere on these markets. We know the Nasdaq's left heaps behind. It can do so. The statistics on gaps we'll do later on this week in the video, so definitely stay tuned for that. But the Nasdaq is at that critical level. But we can't use the Nasdaq as our main indicator. We have to use the S&P 500. It's the only one that will most likely give you less false signals. Now, I'll be real with you guys. I thought around that 50 fib, and I'll draw it up for you to 61.8 fib overlays. So if we grab here and we kind of get the 61.8 fib, which you'll notice is around there, I thought in this zone, which is where we are right now, this would turn. I still think it will in here or somewhere around here. But of course, this is my best educated guess based on bringing together so many different reasons. So this is the zone or the area that you have to be very interested in. You've got previous supports. You've got downward trend line on the SPY. You've got an area that left a gap, which we'll look at in just a second here. 42.80 currently on the close. If we were to get a swing above this 4,300, people will lose their minds. On Twitter, people will be going insane. They'll be like, oh, the new bull market, this is ridiculous. I've got to buy, rocket emojis everywhere. I can just tell you right now, this is that zone. Like if I was a sneaky Wall Street trapper, that's pretty much what I would do. I would want to do that now. That would be the ideal goal. Fill the gap that was left here, kind of the inefficiency that was left here. We've got Gapapalooza everywhere up on the SPY. I mean, it's getting ridiculous how many are left behind. Probably the most I can ever think of. There's been a lot. I know in 2020 there was a lot, but this is getting on 7 or 8 gaps left behind now. And imagine if we take this 43.10 level, hit that trend line. What a critical zone to be watching this week. Come and follow us on Twitter because I'll be updating on that. And of course in our Discord. This is a big deal, guys. A huge area for the markets. When you consider what else is going to be going on there, we've got over here previous supports from October of 21. You've got, of course, the January lows. You've got these April highs. This is the big kahuna level. Be careful around this. 43.20 is kind of like the trend line. And where we are right now, 42.80. Big deal. ES futures are the same. The trend, as we've always stated, has never changed towards the downside. And it still hasn't. It's hard to hold in here. And I've been clipping, there's no doubt. You know, clipping in here makes sense to me, but that's a trade. In investments, of course, I always preach the idea that unless a crash is led by land, I don't believe it's the epic wrong crash of the economy. That's my personal opinion. I think that it's always an opportunity. 42.80 though, big zone. We're moving into that big 43.20. Anything in here is what I call the epic danger zone. of trading, and you're going to be looking for turnarounds. How are you going to find one? Well, we don't have many bases being formed. We've got like a 4220, a 4200 flat, and then we've got our standard 4110 and 4090. They're the kind of just the zones or levels that we're stuck on at this point for the SPY. Can the futures or the put options tell us anything? Well, here looks at the Monday expiration. This is the 15th of August, and you'll notice here 418 max pain, 420 lots of puts sitting there. Unlikely that Monday will crash through that level. Of course, it could still fall 80 points at that stage at current time of recording. 416 on the 17th, the Wednesday expiration. Still a lot of puts at 400. Lots of calls and puts, huge amounts of warfare going on there. And then we go over here to the 19th. Now, this is where things get interesting. The max pain is still, and this will change throughout the week. This is the big options expiration. Notice the size, 110,000 puts closing here on the 19th. So this is the big third week expiration, 405 max pain. So that's pointing towards the market could go a lot lower. This is the week, if max pain is going to work out, generally that it does happen. And I want to just bring this point up because remember, we are at the third week expiration. This video is long. I know it's long, but I have to go through everything here. So the reason that's so important is if we go over to the daily here, check out some of these dates. Look at this bottom. When did it occur? It occurred around the third week expiration. When do any of these things occur? We often get big key levels happening around these times. And this is a very important point because if you go back to look at like some of these lows when it was lowing off here, this was the 14th of May, 15th of May, we load off. Then we load off here around that 18th of June expiration. Then we did the 20th of July expiration. Then we did the 17th, 18th of August expiration. So what you'll notice is that often the market will move to extremes ahead of expirations, expire as much stuff as possible worthless, and then move in the opposite direction. Never discount the third week options expiration, guys. Super important one to be watching. If we move over to Ethereum and crypto, we're getting close to that 2,000 target. 2,200 will be the high end on Ethereum, I would guess. At this point, we've got that previous little bit of SUP, which was formed over here. We've got the resistance high, which probably holds the orders before the whole crash happened. And everything in here is fair game for the bulls. There's no sign of it weakening yet. Again, I think the stock market will have to weaken Ethereum. Bitcoin's the same. It's slowly getting up there, just trudging its higher lows and higher highs and higher lows across this. Look, it looks okay. I mean, I think Ethereum is looking way better than, of course, Bitcoin at this stage. Come and follow us over on Twitter if you haven't already done so. We're posting these long form tweets these next couple of weeks to go over everything to do with the markets. Super interesting stuff. Come join us in Discord as well, which is that FX Evolution Discord. And remember, this week is still not out of news. We have core retail sales Wednesday, August 17th, 8:30 a.m. New York time. We've got the stupid FOMC meeting minutes, 2 p.m. here Wednesday. Wednesday's going to be a big one. And then that's pretty much the main stuff for the week ahead outside of earnings. A big thank you to, of course, today's sponsor, which is Tiger Brokers. If you're interested in any of their special offers, check the link in the description down below. And of course, make sure if you're interested, subscribe and smash that like button. Thanks very much, guys. You have a great weekend. See you soon.